Hello everyone, welcome back to the Ichimoku.co daily stock market review for the trading day ending Monday, November 30th. And in particular, welcome back from an extended break over the Thanksgiving time period. I hope everyone enjoyed themselves and that we've all come back refreshed and ready for the new trading day today. Firstly, looking to the S&P 500, and here we've seen formation of a black body candle today, and a fairly large black body, suggesting that the sellers have found some downside momentum, and that's as opposed to the weak trading that we saw over the past 5 consecutive trading days at the end of this significant uptrend. It does suggest that there is potential for the market to trade to lower levels, and with the sellers taking strong control, there is a very real possibility of this trend continuing. Now, we are finding support, however, at the top of this highlighted zone, a previous area of resistance, so we should be watching this as our benchmark for tomorrow. And this suggests that if we do break out to the downside down below the top of this zone into the zone, then we may find very strong support around the Kijun-sen and the Tenkan-sen, which trade roughly about 2067 up to about the 2072 level. Just watching here as well the upside, the resistance that formed over the past 6 consecutive days, including today at 2093. It is a level that had been tested consistently over the last period, with the Thanksgiving shortened period, and has held a strong resistance. So moving forward, that's going to be an important benchmark as well. But also, if we do break out up above 2093, we may find very strong resistance at around number 2100. Now, just bearing in mind that this market still is bullish in all 3 timeframes, trading above the cloud, above the Kijun-sen and the Tenkan-sen, and the Chiká span is just supporting that bullishness. If we do trade lower over the next few days, we may see the Chiká span end up below its corresponding price action, and may suggest that we could then see a change of trend in the medium and fast term timeframes. But at the moment, that still hasn't happened yet. But the build of downside momentum here today suggests that we certainly could see the market trade lower. Now, just looking to a band chart, and the band chart here really does highlight how this very strong bullish bias, this strong bullish tone in the medium-term time frame that was previously in the market, how it's no longer there, and we are now trading around the middle of the bands. The bands are pointing sideways, reflecting a lack of direction in that medium-term time frame. Importantly, the middle of the bands holding a support for today, even on this strongly bearish candle, and this is an area we should be watching very keenly tomorrow for a potential breakout to the downside. If we do see a strong bearish close down below here, we could eventually see the S&P testing down to the bottom of the bands around 2059, where we'd expect some strong support to come in. To our breadth charts, and just looking at the advanced decline line, and the advanced decline line is not reflecting the bearishness that we've seen in the market today. We've seen the advanced decline line and the cumulative advanced decline line move higher, and it's still above the 50 period moving average, so still giving a fairly strong bullish indication, and moving closer to that upper band, which is an area we should be watching very keenly for a breakout above of. So suggesting that the market breadth is not supporting the decline that we've seen today, and suggesting that we certainly could see the buyers return to the market tomorrow. Also, our cumulative new high, new low index is still pointing higher and moving higher, and is very close to that upper band, and suggesting a possibility we could see some strength come into this indicator, and we could see the buyers return. So some very important trading over the next day or so. Now, the Hall-and Index on the longer term chart here down the bottom is highlighting strength in the market, and has moved above the upper band, suggesting we could see the buyers return into the market, as well as the medium term Hall-and Index as well. That's moved higher, but the short term one has failed to move above the upper band and has actually ticked down lower. So that's suggesting that there is potentially some short term weakness in the market. So we should be watching those areas of support very, very closely. To our sentiment, some of our sentiment indicators that we make up as composites and scan the S&P 500 for, and we are seeing some signs of weakness here, and suggesting that with the bearishness that's come into the market, we certainly should be on the lookout for a continuation of that trend. Firstly, looking to the percentage of stocks that are above their one standard deviation band, and we've actually seen that figure decline down to in this case 20.48%, but importantly also the percentage of stocks that are below their lower bands signifying weakness has increased, and it's moved up to 14.8%, so suggesting that we perhaps are seeing some greater weakness in stocks that are underperforming, and we're not seeing the strength that we saw over the last week or so continue in this market, and that's lessening. Also to the percentage of stocks that are above their 5-period moving average, and here we've seen it consistently moving lower over the last week, and it has continued to do so. It's now down at about 42% today, and suggesting that there is some short-term weakness in this market, and we could see the trend that's developed today with the sellers in the market continue to the downside. Also the percentage of stocks that are above their 20-day moving average, that's also moved lower, as well as the 50 period and also the 200 period. So we are starting to see perhaps the beginning of some weakness in the S&P 500. Also looking to the percentage of stocks that are above their 20 period, 50 period and 200 period or day moving averages, and so they have to be, a stock has to be above each of those moving averages to qualify. It just is an indication of strength in the market, and we've seen that indicator move lower and has formed a new peak, and that suggests that we certainly could see some selling in the S&P tomorrow. Next to our Ichimoku sentiment scans that we do on the S&P, and firstly looking at the amount of stocks where the close is above the Tenkan-sen, so giving us a good indication of the short-term time frame. And here we've seen that indicator move lower, so the percentage of stocks that are above where the close is above the Tenkan-sen, short-term strength, has moved lower, suggesting some short-term weakness, and we could see continued selling on a short-term basis. Also in the medium term, with the close above the Kijun-sen, the percentage of stocks where the close is above the Kijun-sen has now moved down to 58% and suggesting weakness, and also the percentage of stocks where the close is above the cloud has moved down as well, down to 53%. And the percentage of stocks here that are below the cloud has actually just moved higher. It's at 23%. So this is suggesting that we are perhaps beginning to see the start of some weakness in the S&P, and we could see continued selling. But obviously a lot does depend on what we saw on that chart and the support that's close by. Moving next to the Dow 30, and here we see strong selling in this market as well as the S&P. The sellers returning quite strongly, breaching down through the 17735 level, which had potential to act as support. But the more important support area is at the bottom of the highlighted zone here around 17687, and about 3 or 4 trading days ago we did test down to that level with the buyers coming in quite solidly, so we will be watching that area very closely. We also have the Tenkan-sen trading around there, so strengthening the potential support around there, so very, very important trading over the next day or so. But this solid build of momentum by the sellers suggests that they certainly are stronger in this market, so it will be a good battle between the buyers and the sellers around these support levels. In terms of Ichimoku, a strong bull market in the longer term time frame, but trading well up above the cloud, and still bullish in the medium and fast term time frames, and the Chica span is still supporting that price action, but only just. Next to the Nasdaq 100, and once again formation of a black body candle suggesting strong selling in this market following the very weak indecisive trading of the last few days, understandably so with the holiday period, but the sellers have returned into the market quite strongly, but are unable to breach down through 4659 support. That is an important level moving forward. We do have formation of a bearish engulfing pattern, and we will be looking for confirmation of a change of trend, but obviously a lot depends on how the market reacts once again around this 4659 support. If we do breach through there in a bearish manner, looking to strong support to come in around the Tenkan-sen, trading at 4630, and then also around the Kijun-sen at 46111. If we do see the market breach down through those levels, we do have very strong support well down below there, down through to the bottom of this highlighted zone around 4,510. And just looking at our band chart here with the Nasdaq and highlighting that the strength that we saw in the market previously is no longer here. We may be transitioning or beginning to transition into a new downtrending phase, so watching support areas very closely. The first one is the one that held today, the middle of the bands, and we should be watching that tomorrow. And if we do see the market breach down through there, good potential for the market to trade down through to the lower band at 4,597. Moving next to the Russell 2000, and this market certainly has been the stronger market even during the holiday break, and we've seen the buyers continuing with control and perhaps some eager punters building on some smaller cap stocks, just building some positions here. Buyers strongly in control for the previous 5 or 6 trading days, but today the sellers have taken back control. Importantly, support coming in around this previous swing high. We've just tested down through there in a bearish manner. This suggests that with the build of momentum, we certainly could see the trend change. Technically we haven't seen the change of trend today, even though the sellers have dominated the market today at the close. And it has set the market up for a potential change of trend, but we'll be looking for support to come in also down around this previous swing high here around the 1191 area. We do have a fairly strong bullish market in all 3 timeframes, and that suggests that we certainly could see the market find support around one of these levels and then see the buyers return back into this market quite strongly. And obviously this is where we're seeing the strength from some of the advanced decline figures that we've seen, where we've seen the smaller cap stocks finding some strength and adding it to the greater number of advances over decline. Just moving to our asset class ETFs, and firstly to TLT, the Barclays 20 plus Treasury Bond Fund, and here we've seen some buying coming into this market today, so perhaps something of a minor reallocation of resources away from equities into bonds. Remembering this is only on the daily chart, we see the relative strength comparative still below the 100% level, but it is moving higher, and momentum however is above 100% and has started to move higher. Importantly, breaking out through the top of the bands here today, and we'd like to see confirmation with another bullish candle up above the one today and continuing above the upper bands if we are going to see this trend that there is good potential for to the upside to develop further. Also on the Ichimoku chart, watching the resistance around the Kijun-sen where the market has traded just to today, so very important trading coming up for bonds for tomorrow. Next to gold, and we have seen some buying in gold, but it has been very, very weak in recent times and trading well down below each of the Ichimoku indicators, well below the Ichimoku cloud, suggesting that we are due for a bounce in gold, and it is looking very overextended. Also trading down below the lower band, still closing below the lower band and finding resistance at that lower band, and that suggests that we could see the return of some selling for the next day's trading, but we have formed something of a pivot point buy signal here, and suggesting we could see the market break out through the band and into the bands and attempt to mean revert back to the middle of the bands around 103. In terms of relative strength comparative, still down below the 100% level on both the relative strength comparative to the equities market and its momentum, and suggesting that we certainly are still lagging the overall equities market, but we are very close in terms of momentum to the 100% level, and some continued buying here would see that tick up and see the gold asset class move into the improving quadrant. Just moving to some stocks now, and looking firstly at Activision ATVI is the first one we'll be looking at, and here we see continued price activity up above each of the Ichimoku indicators and also up above the upper band, suggesting a very strong bullish tone to the medium-term uptrend in this stock. The band here has acted as support for the past week or so, and there is good opportunity for the market to test to higher levels, but if we do see continued buying, we will be interacting with this area around $38, an area that we saw previous price rejection from, and we have tested just to there on a couple of occasions and seen some selling coming in the past, and in the recent past some minor selling, so a very important area up above here. We do have strength in terms of relative strength comparative, strongly outperforming the overall market, and the momentum of relative strength is above 100% level, is above the 100% level as well, and also has ticked up in recent days, and suggesting that we could see continued strong performance in Activision. Home Depot was a recent solid performer, and for the past week or two, solidly performing above each of the Ichimoku indicators, supported by the Chica span, and well up above the bands here. But today we've seen selling coming in, and it's probably time for profit taking, and that's perhaps what we've seen today. Sellers returning, not strongly, but suggesting a real possibility of a retracement here. If we do see a retracement, looking to the Tenkan-sen 129.29 to hold a support, or at the upper band at 131. In terms of relative strength comparative, very, very strong, well up above the 100% level, as is the momentum, but the momentum has started to come off. Next to Nike, and Nike had been a solid performer in the recent past, and we've seen some selling for today. Previous days trading, we saw formation of a small black body candle at the end of a significant uptrend, suggesting that the sellers had found some downside momentum, and today sellers taking control and changing the trend. On the band chart, we've now traded back to within the band, suggesting that that strong bullish bias is no longer in the market. And when we broke out above the band, the upper band, for the second time, we didn't see strong follow through to confirm, and this suggests that we may see the relative strength comparative start to come off. We are starting to see that in its momentum, where it's just ticked over. Even though we are showing strength, perhaps we are seeing some profit taking here in